Hello and welcome to Analyst Hangout. I am Omobolanle Adeshui. Well, joining me on the show today are Ambrose Omodion, Chief Research Officer, Invest Data Consultant Limited. Thank you for joining us, Ambrose.
Thanks for having me.
And also we have right here Charles Fakroha, stockbroker, business analyst, and he's right here with me. Good evening, Charles.
Good evening, Omobolanle.
And joining us via Zoom, we have Kasim Garba Karafi, MD, CEO, APT Securities Limited. Thank you for joining us, Kasimo. Mr. Karafi, if you can hear me, thank you for joining us. All right, Mr. Garba Karafi will join us as we move on the show. Well, let's begin with the stock market report and looking at what happened during the week. Well, we would be looking at what the market was like, seeing how the market performed. And that is showing that Nigerian stocks, as measured by the benchmark all-share index, SASI, officially fell into correction territory last week. This represents a decline that exceeds 10% from its most recent peak or high. On the other hand, the bear market is typically defined as a 20% drop from recent highs. Challenges such as CBN monetary tightening and rising inflation have kept the stock market volatile for most of the second half of 2022. And as we advance, market fundamentals such as corporate revenue and profits will likely be an additional concern. A major question now is whether rising inflation is hurting the bottom line for companies. Companies have been able to maintain earnings levels because they have pushed through price increases. But with consumer wallets already under extreme pressure, can they continue to do that? That is the big question. But first, let's talk about the activities of the equities market. Ambrose, let's look at how the market performed, especially as we saw the market fall into correction line. What's your reaction to this?
Actually, when it comes to equity market, we're bound to see correction with, after you've seen a bull rally of almost a 25 to 24% gain. Yet before the second half, we're seeing a correction. It's expected anywhere in the world that people will take profit. But the fear of the rising inflation at the same time, almost 3 times back to back, interest rate hike, are also contributing to kind of reshuffling what imports follow. Funds leaving equity market to safer instrument like a fixed income and other TB. But I believe that design investors are taking opportunity that now we're seeing good dividend in the market as a result of what the sell off. Like we already read that about 10% down from the peak of the year. For me, it's a good one. We're supposed to come for correction. We say the bear market went up about 20%. Now we're still in a corrective mode. There's no bear market in Nigeria. But the good thing is that the bottom line is any season around the corner. Macroeconomic data is still coming in to give us where the economy is. But for good investors or traders, you know that at this season, the opportunity that come with any season, whether in a bear market or a bull market, there's an opportunity associated with what any season. That means for you to make use of the fundamental technical analysis, this is the right time for you to position. Why? Because during any season, we're going to see increased liquidity. Whether we're saying that the liquidity in the market is low, but once any season does kick off, funds start coming from somewhere. Increased liquidity, we're going to see what buying and buyout. Also going to be surprises and disappointment because some company will come with surprise result, market react. So we'll come with disappointment, market react. For that, this oscillation we're going to know in the market between now and the next 5 to 6 weeks in time. I believe that design investors should not panic. But position in those sectors out of the 12 sectors we have on the market, there are sectors already that showing that this sector performance is likely to be sustained for what we have seen in Q1, Q2, and Q3 we're expecting. For that, if you're in that kind of position, you don't panic with what other people are saying. Just hold your position and watch what the market is. All
right, we'll further analyze those sectors. But what are your expectations as we expect the third quarter figures?
Well, it's going to be a mixed feeling. Yes, the expectations, I wouldn't say investors should do anything differently again because all the numbers are already there. We're seeing everything. It's just like he said, just to position themselves. Yeah, but in positioning yourself, I always say you need to have some little bit of knowledge. It is very key because any person who has come to the stock market, yes, we encourage a lot of people to come, but you should do, it's not only your stockbroker. Your stockbroker can do the little he can, but it is you, because at the end of the day, it's you that takes that decision. So you need to understand some basic fundamental analysis, technical analysis, combine them together and take an informed decision. However, for some investors, yes, that are looking at long term, Yes, forget whether it's election year next year. We already know that the gladiators are market friendly.
Yeah.
So we're going to see them do that kind of market friendly issues. But I will still say investors should do their little homework, look at companies that have the pedigree, at the same time, the ones that have strong fundamentals. It is always key. You can never go wrong.
But can you tell from the surface of it, from the look of things?
That is where knowledge comes in. You need to do your own little research to understand this company has strong fundamentals based on Q1, Q2, you know, and of course, the other numbers you are expecting. And of course, what they have done before in the past, or even the product they are even selling. You'll be able to know that, yes, these companies have, and of course, management of those conflicts, because it's very key.
Indeed. Well, Ambrose, let's look at the challenges such as the CBN monetary tightening and the rising inflation, which has kept the stock market volatile for most of the second half of 2022. Do you see this also affecting the performance of the third quarter figures?
Yeah, it's possible. There already is a vibe in the market, a mixed vibe for this expectation. But I believe that CBN should also learn from what will happen in UK, that in any environment there are peculiar variables that you should look at when you are taking your monetary policy decision or when you are adjusting your policies. In Nigeria here, we have seen that because other trend, other climate adjust hiking rates, we don't follow suit without even looking back. Because actually, if you look at where we are, if you are already in the pre-election year and you are hiking rates just to reduce liquidity in the system, and to start with, no liquidity in the system that you are reducing, because as we speak now, we already have a low liquidity in the system. But when I saw a report that they were having a excess liquidity in the system, I say in this economy, I tried to look at my own data again to see, fine. But another thing, you consider that at this time, we have seen that rate hike has even put UK where they are today. The finance minister was sacked today.
Yes.
It tells you that they are serious. They know what.
But that also affects the market.
Yeah, they are serious. But here, we are seeing that the MPC committee and the CBN governor they all agree to the hiking rate for the worst. That I will tell you that this last one about almost another 150 basis points again, and already seen that the warning that World Bank and IMF have been singing for over like 2 months or 3 months now. After reflecting already, in some matured economy. That for us, and they warn that Africa continent, if care not taken, will also go back to recession. Why? Because we're hiking rate because that are doing. Look at what happening in the economy. If you're increasing unemployment rate, we are also risk of what insecurity, and also not only that, when we are increasing credit rate, companies will start constructing. Why? They will start laying off people because of cost of production, and that will also oil the economy in a negative direction. I believe that at this point, what we should do for investors. What has happened the last quarters? The last 3 months. Now let's say for the third quarter. Look at when the first rate was adjusted around the 14th. There was good stability before the last one, but I believe that this last one will not reflect on the result of third quarter that happened. That means we're likely to see a bit stable performance. But for investors, there are some sectors that you don't need to look at because already high cost of fund, and also those that have not done backward integration in that sector. There are companies that in sector they are doing well. Look at what is happening. If you have not done backward integration, you are importing anything, not when you are importing inflation, because we know that our FS market here is having challenges.
Yes.
For that, such companies we're going to eat up their bottom line.
All right, we have to take a break now.
Why those that have done that backward integration look at their bottom line? Like also to come up with. That is what you want to do, to manage or to analyze the market now and take informed investment. Of
course, and I would also like us to talk about the effect of the finance minister, resigning. Would see how that would impact. Well, he's out of office now, so we would look at how that would impact the market. But that would be after this break. Please stay with us.